attendees are in listen-only mode.
Good evening, everyone, and welcome to the December edition of Digging into the BI, where your members from the Maryland chapter and the DC regional chapter get together and look at the stocks that are currently in the latest issue of the Better Investing magazine and sort of walk you through our interpretation by using an SSG on the stocks that have been featured. Let's go. And those are the people that will be presenting, and those are the stocks we will be discussing. Next slide. So, as always, this is a disclaimer. We are doing this for educational purposes. We believe, as Better Investing does, that you should conduct your own research and review of a company before making any investment decision, whether we own it or not. We try to indicate to you whether we own it, but please do your own research. This is designed really to be able to help people understand how to do the SSG if you're a little uncertain. And if we do mention any websites or locations, we are not endorsing the use of that website or promoting the use of their website products or services. And yes, this is being recorded for future use. And if you download those handouts, I will show you in a little bit where you can find this stuff. Next slide, please. So here we are. We're Better Investing. We're an investment education organization. And if you click on that blue underline, that is a hyperlink that will show you who we are if you're not familiar with us. And that we focus on long-term investing, another hyperlink there that will be able to show you what our investment approach is in the Better Investing community. Please remember that all of us that are making presentations tonight, we are volunteers. We're doing this because we love to share our knowledge of investing. But again, none of us are professionals in this area. So as again, you hear me say it a couple more times, do your own research. Next slide, please. So if you're new to GoToWebinar, and like here over on the right-hand side, you'll see that control panel, the one that has sort of the grayish blackish background, and you can collapse or expand it by clicking on that arrow there. And you can also, if you grab where I have those green circles, you can grab it with your mouse there and move it to a different part of your computer. You can move it over to the left side, you can move it down, whatever. Your microphone will be unmuted will be muted during the presentations, but we will unmute when we get to question time at the end. But please go ahead and raise your hand during the question time. And as Kent just showed us, there was someone who put in a question in the question box about recording. You can type in there and Kent or someone else will be able to respond to it, and you can choose whether to do it privately or individually. Next slide. So if you're having trouble getting on there, there's again another quick hyperlink to be able to show you how to get going at GoToMeeting or GoToWebinar. If you're having audio problems, you're going to have to check your audio settings first. Since we're all able to hear each other, then it's probably something on your computer, and check to see whether you have computer audio or phone call clicked on there. And again, as I said before, don't forget to download the handouts. There's one that has the entire slide deck of all the stuff for tonight in one easy document. And then there's 4 completed SSGs from all of us with our own individual judgment. So go ahead and download those. Next slide, please. If you want to be able to see things bigger, you can be able to click on the Zoom link that you see up at the top and make that bigger. Or if you want to grab something to be able to sort of take a look at, you can hit a screenshot. And your computer, if it's relatively new, you will be able to get a screen capture of it and take a look at it and save it. Next slide, please. So what we're going to do in this webinar is we're going to be able to show you how to use the resources at Better Investing. And again, you do not have to be a member of Better Investing to be here. But again, you can click on that blue underline. That's a 90-day free trial. We focus this webinar on basically beginners, people that are uncertain of their judgments, and we want to be able to help them practice and get their own best practices. And again, as I said before, this is a joint program between the 2 Mid-Atlantic chapters, and we're also trying to promote the 3 model clubs and the Visit a Club program, and we'll talk about those in a little bit more later on. And next slide, please. Hmm. Are we on the next one and I'm not seeing it?
Yeah, I'm on practice doing the SSGs.
Yeah, I guess mine's buffering. That's the reason I sort of stopped. All right, so what we're trying to do here is practice on the SSG how to be able to do things. Um, and you can be able, that's the whole point of doing this. And in just over an hour, we're going to be able to look at the monthly stock to study, the undervalued feature, and then we'll also take two other presentations, and they can come from any of those other locations as well. Next slide, please. So what we do is we feature the stock. You can find those stocks in advance by going to those locations. The one that's highlighted in yellow, welcome to Better Investing. And you can look at it under About Us in the green there, or you can scroll all the way down to the bottom where it's in black and under About Us. And you can be able to see with Presto Magic the next slide. You will be able to see where we get these. So on slide 10, it shows the news releases and how they selected Apple and CitiGroup as our stock to study and undervalued feature. And you can also even see what we're going to be discussing in January. So next slide, please. So if you want to make sure that you don't miss any future announcements, on slide 11, you have a way to be able to get the email and product subscription information. If you click on those once you sign into your account, and if you go bingo to the next slide, slide 12, you will be able to sit there and get a link for the latest announcements. Where that red arrow is to be able to get notices from your respective local chapter. But before you hit that Save Changes button, go on up and highlight. You see where we have it highlighted in yellow, the BI Weekly newsletter. Click on that, and we will show you with the magic of Cheryl's finger. We will go to slide 13, and you will be able to see this comes on out as a member exclusive. It's the BI Weekly newsletter, and they highlight some of the education, things like ticker talk, stock up. Again, you have to be a member to be able to receive this. But again, if you're not, you can clearly sign up for the free 90-day trial. It comes out in the close of business on Thursday. And if you signed up and you're not getting this email on Thursday, check your spam filter. We're getting to the end of the year, so this is a time when they start talking about club treasurers and the work that they have to do. Next slide. On slide 14, we have our Facebook pages. I was delinquent this month in putting up anything about this event. I've been trying to do that and put up things from the model clubs, but that's a place to be able to find it, and it can also be shared with some of our non-members. Let's go to slide 15, and Cheryl, why don't you take over?
The DC chapter, the third Tuesday of every month, offers Money Matters book discussion. We are very good about putting out financial books that would be of interest to people, often have a wide variety of folks coming. Next one is going to be in January. They don't have a meeting this month. It's going to be the 18th. Starts at 7:30 to 9 p.m. online, and it's going to pretty much stay online for the duration because get a wider variety of audience that way. And then the cost is free, open to the public. And in January, the book is going to be Common Sense, The Investor's Guide to Equality, Opportunity, and Growth by Joel Greenblatt. Now, next slide.
And Brian, you want to tell us about the Maryland chapter?
Yes, as it shows there, go to the Maryland chapter, and underneath down on the lower left, the news and articles. Right now, the 2022 Stock Pickers Contest is going to start in I think the middle of January. The note there says that they'll be holding a new stock picking contest go through August. BI clubs and club members can use it, build a portfolio, win some cash, and keep looking back there. The details should be published soon.
Okay, we're on the Maryland Model Investment Club.
Okay, the Maryland Model Investment Club meets the second Saturday of the month. We will be meeting this Saturday starting at 10:30, and our education topic for the day would be when to sell part 2. And the stock to study is actually one of our current portfolio holdings, Air Lease, and we're actually doing a quarterly review of Air Lease.
Okay. And next slide, James, you want to tell us about the Montgomery County Model Investment Club?
Yes. So my name is James, and I'm from the DC Regional Chapter, the Montgomery County Model Investment Club. And I'm one of the 8 partners, and the club was originally founded in 2017. I was a newbie. I didn't have really any knowledge of the stock market, and the members were great with helping me and bring me along and educating me. And before the pandemic, we met at the Rockville Library, but now we still meet on the 3rd Wednesday of the month, but virtually. And every meeting, we have an education and stock study segment. And the upcoming session on December 15th, we have Weeding and Feeding Your Portfolio. And our stock study will be your Marine Max Incorporated. And if you're interested or have any questions, please contact Marilee. She's great, and she will reach out to you really fast. She's really good at reaching out to people who are interested.
Thank you, James. Next slide.
All righty, I'm up again. By the way, I'm Cheryl Patterson, and besides being a member of the Model Investment Club of Northern Virginia, otherwise known as McNova, I'm also the president of the DC chapter. We started in 2008, and we've grown and then shrank back down now to 12 partners. The next meeting, which is we're held on the 2nd Tuesday of the month, is December 14th. It's going to be from 7 to 9 p.m. Right now, we are going to be doing virtually as well, probably until maybe April, depending on how things go with the world. And you can see our web link there for the GoToMeeting, or dial in on your phone. There's a number there and an access code. The education this month is going to be portfolio harvesting. We're doing that as trying to get ready for tax time, as Kevin mentioned before. And the stock to study is going to be MKS Instruments with the ticker MKSI. We are open to visitors. So if you are at all interested in seeing how a model club operates, or would like to listen in on our education or stock study, please go to this link, and all are welcome. Just click on the link and at the time of the meeting, and you will be joined to the meeting.
Thank you.
All right, the next slide is mine as well. We have something called Visit a Club. And for clubs that are interested in garnering or looking for new members, you can put in documents, send them to the DC or Maryland chapter, depending on which one you're closest to. And you can then, after you fill out the proper documentation, get your club advertised in this. And for somebody that may be coming in to the website and looking for a club near them, they can click on the Visit a Club link, and they will get to that list, and maybe contact one of the people on the list to see how there is a fit. The other part also with the Visit a Club is that you can contact, like I said, either one of the chapters, depending on where you are, and a director can visit you during your club meeting and perhaps help with something, an issue that you're having, or just go over what's new on the website, or whatever the need is of your club. You can contact us and set it up so that either virtually or live, depending on the situation, that we can visit your club. And I'm on the next slide, and back to you, Kevin.
Okay, so this is the cover for the December issue of Better Investing, and you don't have to wait for it to come to your post office. It comes out 10 days, 14 days in advance, and can be seen on your computer, laptop, smartphone, or any other electronic device if you have a BI subscription. Let's go to the next slide. And so what we have is that if you want to be able to find the stuff for how to be able to look at this on a mobile device. You look at the green arrow over on the left-hand side that will walk you through the steps for there. And then also with the two featured stocks, the undervalued feature and the stock to study, there's usually additional resources that don't make it into the magazine. And you can click where that red arrow is on analyst reports and other resources, and you will be able to see stuff that they've used to be able to help make their judgments on that. So if you're interested in looking at, in this case, whether it's Citigroup or Apple, the stock to study an undervalued feature, then you can be able to get that. So that should be able to help you. And next slide, please. And since this is digging into the BI, we want to be able to feature at least one column or story from there. And this time it was a growth stock column. Cy Lynch does this. It comes out quarterly, not a hard quarterly, but generally, 3-4 times a year. And he tries to get this portfolio growth stocks to outperform the Vanguard Total Market Index, which is currently in this article at 11.5% annually. And he was talking about adding FedEx. And what's interesting is he talks about if you make a portfolio-centered decision-making methodology, you're more likely to take FedEx because it would increase the return he has. And if you don't understand portfolio-centered decision-making, click on that blue link in the lower left-hand corner, and we'll take you to a presentation he had at the Puget Sound chapter, which is out in Seattle. But he has spoken at that at numerous conferences and stuff, and it would be a good thing to take a look at. Next slide, please. All right, so now we're going to start going through the presentation. So the first two we're going to be looking at will be in core, and that will be Boston Beer and then the Southern Missouri Bank Corp. So James, why don't we turn it over to you?
Great. Will I be controlling it, or will I have a...
No, you just tell me next, James, and I will flip the slide for you.
Perfect. Okay, great. Well, welcome everyone. My name is James Betterson. Again, I'm from the DC Regional Chapter at the Montgomery County Model Club. Today, I will be presenting on the Boston Beer Company, and their New York Stock Exchange symbol is SAM. And I found the stock two ways. One, through the Better Investing website, their first cut stock reports, which I'll go over in a little bit, and then also through Morningstar's 5-star stock rating. Next slide. So how I found it. Next slide. So again, I found this stock through the Better Investing website and through Morningstar's stock rating report. So the first cut stock report, you can see to the right, Boston Beer. Usually when I see a stock that's listed on the first cut stock reports, that's usually a good sign that they're doing something to get the eyeballs and attention of other people. So I saw it here for their November 2021 edition. And then my club, they trained me to go to Morningstar's stock report and look for 5-star stocks. So I continually do that every month. And as you can see, I saw the stock listed as a 5-star, and that piqued my interest and made me bring it to my club members. Next slide. So we're going to talk about the company and a little bit about what they do. Next slide, please. So the company was founded in 1984 by Jim Cook, and guess where? Boston. And Boston Beer is the leader in US high-end malt beverages. Again, they like to think of their products as high-end. That's going to be important later on in their presentation. Also, they have adjacent categories with strong positions in craft beer, hard cider, and hard seltzer. So whenever I look for a stock, I try to understand its story. For instance, one of the last stocks I presented was Merck, and the story was what drugs do they have that makes them popular. With Boston Beer Group, the one word I want you guys to keep in mind during this presentation is hard seltzer, because there's a direct correlation there. But the sector that Boston Beer Group works in is consumer defensive, and the industry is beverages and breweries. Next slide. So what does SAM sell? So the firm sells an array of flavor variants and package sizes, predominantly centered around 4 priority brands. They are Samuel Adams, Angry Orchard, Twisted Tea, And again, hard seltzer, but the brand name is Truly. 3 of their products are non-beer products, and that is going to continue to grow. Even though their name is Boston Beer, they're heavily invested in non-alcoholic beverages right now. Next slide. So the analysis, let's talk about the company a little bit behind the curtains. Next slide, please. So you'll see with the 2020 financial performance, you look at the years 2017 through 2020, and it looks very attractive if you look at graphs. It just shows continued growth year over year in both. If you see the legend right there, green is revenue and blue is earnings. And that's really attractive when you're looking for stocks, right? And I'm going to go over some of the bullets, but you want to know what else had a tremendous growth rate over the last couple of years? Hard seltzer. The category grew 0.8 billion in 2018. It grew another 1.1 billion in 2019. It then grew 2.5 billion in 2020. And this year, if you go to the next slide, you'll see that it didn't do well. And we can tell this because of the performance of Boston Beer Group in the last 2 quarters. So you'll see in the June 2021 column, they had over 600 million in revenue, but they were slowing down in their net income and diluted EPS and net profit margin. But in September 2021, you really see the revenue and some of the other numbers hit the mark. For the first time, they didn't beat the quarter over quarter revenue. You see, they did 560 million, which is still good numbers, but not compared to the growth rate they had before. See the net income, diluted EPS, net profit margin, and operating income all suffered. Now, the unexpected rapid slowdown of the hard seltzer category this summer really impacted their business and even their competitors. Constellation Brand CEO Bill Newlands even warns that the category has been sluggish over the summer, and saying that the high new entrance of competitors has created chaos in the category. So you'll see that it's not just Boston Beer Company that suffered a bad quarter, it's anyone who's invested in that hard seltzer category. Next slide, please. So this is their graph in the Better Investing SSG right now. And you see 2021, this is a nasty dip. It's not what you want to see when you're about to buy a company or you're looking at a company. But Boston Beer Group really just had a bad quarter, or bad 2 quarters. And I think that the company just basically, misjudged and miscalculated for the high growth of the hard seltzer category that never happened. And they suffered by having temporary costs these past 2 quarters. But I think the business will get back on track after seeing this wake-up call. And I think that the hard seltzer category will continue to grow despite rising competition and cooling consumer interest. Next slide, please. So what I want to show you guys is some of their peers and how they match up to them. So you see I have Anheuser-Busch, I have Molson Coors, I have some of the top giants of the industry. So compared to their peers, if you look at the growth, over the last 10 years, Boston Beer Group has maintained an 11% growth rate, okay? Molson Coors, they've been around 15%, and that's really it. So they're top 2 in the historical sales area. And you see the peer group industry average is around 16%. Next slide. But when it comes to earnings, they're leading the category. Again, projecting a 12% growth rate over the last 10 years, right? And then you can see that the competitors haven't done well when it comes to their earnings. So again, top in sales and top in earnings. Next slide, please. And they also have great return on equity numbers. If you look at Boston Beer Group, the 5-year average is 19.6%. And they've maintained double digits for the last 10 years. So, when you look at this story and you see the peers, they're matching up with them. And I think that says a lot about the company. Next slide, please. So let's talk about judgments. Can you go to the next slide? I included Value Line because I use them a lot, and I like their analysts and how they describe the story of the stocks. And they basically gave a half glass, half empty approach. It really depends on the investor. So you'll see that Value Line suggests that most investors look elsewhere given the uncertainty here. And but they also say value-minded investors may want to consider this timely equity given a notable pullback in price and attractive valuation. So while some people are running from it, some people might run towards it due to the price cut. And I also think that some of these partnerships the Value Lines talk about is important. Boston Beer announced 2 promising partnerships that entered the fast-growing self-care market by teaming up with Entourage Health Partners to make a cannabis-infused non-alcoholic drink. So trying to kill 2 birds with 1 stone there. And then Boston Beer Group also partnered with industry giant Pepsi to brew a hard Mountain Dew beverage. And that should help the company as well. So looking at some of the numbers to the left, you see the 2024, 2026 projections. The analysts are saying that number could be as high as 1270 and low of 845. And currently, Boston Beer Group's in the mid 400s after the price drop. So Value Line experts believe their sales per share will be $312.50, and you see some other numbers there. The earnings per share 35.25 by 2024, 2026. But there's some big numbers at the bottom left corner I want you guys to look at. The annual sales over the next
4 minutes, James. 4 minutes.
Okay, thank you. Over the next couple of years, look at the sales as 19% and earnings as 21.5%. Next slide, please. So finishing up, Boston Beer Group has maintained an average growth rate of 11%, and the historical sales and earnings per share have been really good over the last couple of years. Their pre-tax profit return on equity has also performed historically well, and their debt to capital has increased due to acquisitions, most notably Dogfish Breweries. Next slide. So with my numbers, I have the 5-year average high PE of 43.1 and the estimated high earnings per share of 13.9, which gives a forecasted high price of around 600. And then you see the closing price recently was 460.40 times 80% of the price, which is what they teach in my club. When you have some uncertainty, gives us a forecasted low price, I should say low, of 368. So next slide, please. You will see that the company is a hold. Can you go to the next slide, please? And even though it's a hold, despite industry uncertainty and risk factors, I think experts believe that the stock will bounce back. So I think that it might need to be, next slide, please. I think it might need to be on ice for a quarter or two. But overall, next slide. My conclusion is SAM is a medium-sized, steady growth company. It's fairly well managed. It's overpriced currently, but I think that is a buy at $298, and it should definitely be on your watch list. And that is the end of the presentation.
Thank you very much, James. That was great. Appreciate it. Okay. I'm up, and I'm going to be doing Southern Missouri Bancorp. And this came out of a ticker talk from last, well, now 2 months ago, end of October. And I also found it in the predefined screen. So let's go to the next slide and find out a little bit about Southern Missouri Bancorp. So here it was on Ticker Talk, and you can be able to find that the screen capture on the left-hand side. And they do some small education on Ticker Talk. So around the hour mark is when they start looking at what they call 5 and 5, where they look at 5 new stock ideas. They don't complete the SSG, but they just sort of say, here's some that look promising. So I use that as a starting point. You can also find it in the predefined screens under small company. There's one of 15 that hit there. If you don't know what their metrics are, right to the right of small company, you'll see a question mark. Click on that and we'll give you the screening parameters from which they've used for that. So that's how I came up with it. I found it, just like James says, I could find it in 2 different spots in the BI community. And I'm like, okay, now I'm ready to take a look at it. Let's go to the next slide, please. And so here it is, Southern Missouri Bancorp. I usually like to see if it's in one of the big index components. This one is not. Sale size is really small. It's 100 million. That's, it gets a little tough trying to evaluate companies because there isn't a lot of coverage on it. but it's in the financial services. It's a regional bank. It's out of Poplar Bluff, Missouri, which is just a little bit to the east of the Ozarks. It goes all the way back to 1887, but had an IPO in 1994. It started out as a state-run savings and loan, but they mostly focus on consumer loans, and they have grown basically by a combination of organic growth as well as small acquisitions. Let's go to the next slide. So the problem we run into is it's really lightly covered. These are sort of 3 or 4 of the places we look. In the upper left is value line. And if you, that form right there tells you it's in the small and mid cap edition. So it's just a straight algorithm. There's no analyst looking at it. It's just the straight numbers based on what their formulas are. On the upper right is a CFRA. And again, if you see where I have that box highlighted, when it looks like that, it means it doesn't have an analyst. And the yellow highlight says it's a quantitative report. And again, it doesn't have an analyst covering it. And the same with the Morningstar in the lower left. If you see something that has a star with a Q rating, it means it's a quantitative measure. So all 3 of those do only have algorithms that look at it and no analysts. So we're sort of stuck with things. And over on the Manifest, which is a separate subscription, it does have a high quality, and its par is just outside of what we would call the sweet spot. So why do we want to look at banks? No, we can go to that next slide. We can go to slide 50 because it was perfect timing. So I like this quote from 5 Rules of Successful Stock Investing. It's by Pat Dorsey, who's no longer there. He actually opened up his own shop and has done quite successfully. But this book, while 10 years old, still covers a lot of good stuff and sort of breaks down the industries. And while their approach is a little different than ours, it's pretty similar that we can go with it. And I like this approach is that, you want to look at banks because they really help funnel our capital formation. I mean, without it, you can't buy homes or cars. Businesses can't expand. So understanding them. But banks are tough to do. If you're first starting out, this is going to be really tough to do. But we have some ways to sort of help you. Next slide, please. Let's talk a little bit about the difference between thrifts and small regional banks. I found this article from Bankrate, and if you see in the lower right-hand corner, there's a link to it. But they use thrifts to say, if you think of this time of year when we have It's a Wonderful Life and the Bailey Building and Loan Corporation, that was basically a thrift because thrifts they basically focus on consumers spending and lending. So therefore, it's homes and cars and stuff like that. And that's basically where a thrift is. But it can also, there's a lot of confluence of those things. So small regional banks sort of overlap. The one thing this story says is that the only real difference between them, if you were to walk in, is that thrifts tend to pay a little bit higher interest rates on their stuff than banks, but it's not like you're going to be racing to thrifts to go there. Next slide, please. I like to look at the CFRA industry surveys, and there isn't one for thrifts, but there is one for small banks or regional banks. And this sort of gave a nice background on it, and you can see how much thrifts have sort of contracted in the last 40 years and the like. So when I'm looking at competitors, I'm going to basically sort of combine them, whether they show up as a thrift or as a small regional bank, but I'm not going to compare them to something like CitiGroup, which Brian's going to talk about in the very next presentation after mine. Next slide. So one of the challenges that all banks have is what's going on in terms of the fintech, financial technology, and being able to stay with that is a big concern. Federal Reserve in New York says that these internet companies that are internet bankings like Axios and the like are being able to process their loans faster. So that's always put a pressure on these things. And they're really trying to find ways to be able to cut this. And one of the ways these companies will do it is they have to really sort of have artificial intelligence and blockchain. And I give you a definition of blockchain and a link to if you need to understand more about it. But these really small regional banks still have to be at the cutting edge of technology to be able to protect their clients and their money and their services. So next slide. If you want to be able to dig deeper, I have things on both banks, small regional banks, and on Southern Missouri Bank Corp. All of them are hyperlinks, so you can go to them. The last two are stuff that was in the BI Stock Up, where you need a BI subscription, and where directors, whether it's Joe Farrell or Ross Meredith, walk you through sort of how to do bank analysis. I won't do that here today, but if you want to understand banks, and it took me several years to get comfortable looking at banks, read those and just sort of keep practicing. But don't discount it because you can't figure it out at first. It will come to you. Next slide. I think we went the wrong direction. There we go. I know I'm doing this in Core, but I wanted to be able to show you the front side of Plus. I sort of like to look at this to see how they are. Here are the people I chose as competitors. So Southern Missouri Bank Corporation is in the upper right, and there are the other ones we're looking at. And in the lower left for local people, that's Sandy Spring Bank. I thought that was kind of cool. I've looked at Sandy Spring Bank 2 or 3 times. I've never pulled the trigger. In fact, I've never owned Southern Missouri or any of these other companies as well. Next slide. So if we want to look at historic sales, these are, again, in Core. You can be able to see we're looking for those straight lines. And just because Sandy Spring in the orange is higher, it's a larger company. We're looking for the straightness of the line in Southern Missouri is right there, but all of them are really quite good. But Missouri, if you look at the numbers down below, their sales growth has been at 15% in the peer group, which is what I tend to like to look at. I have highlighted in yellow, is 8.6. So it's doing significantly better than the other ones. Not that the others are not doing as well, but it's still pretty good. Next slide.
5 minutes, Kevin.
Thank you. So here's our historic earnings. I took out my First Financial West, I think is, if I'm getting it right. It's First Western Financial, because they had some really goofy early years, so it really skew things up. I'll put it back in. But again, those are all pretty consistent going through there. But again, if we look at Southern Missouri, that's a really good, solid number going all the way through. Next slide. And so when we're on the pre-tax profit, we have, you can take a look at this again and see how things are going. My computer seems to be buffering on me. Excuse me for a minute. The pre-tax profit on sales, if you see that, my First Financial, Western Financial, it doesn't have as many years, and it's kind of tough. And you look at it that on the pre-tax profit that Southern Maryland has really improved in the last couple of years, and has overtaken Sandy Spring. Let's go to the next slide, slide 59. Again, MYFW has a good ROE, but they only have 3 years. So I'm going to sort of pull them off because I just think the others are pretty good. And this is sort of how I sort of winnow down to them. But again, Southern Maryland Bank Corp has the best. And, you know, getting something up for a bank in the 15% range is really, really good. As you can see, the others are around 9%. So they do a really good job at it. Next slide. Slide 60, we talk about debt to capital and their peers. Now, again, banks deal in debt, so they're going to have historically higher numbers than others. But here's what's happened is that the rate of the debt has dropped in both SMBC and Sandy Spring because they've been contracted. That's actually a good sign that the debt has gone down. But overall, they all look pretty good. But I like the position of Southern Maryland on the debt side. Let's go to slide 61. This has to be in SSG Plus. You can't do it in Core, but it's return on average assets. And Brian's going to talk a little bit about here too. But those are sort of some of the metrics to take a look at. If you get over 1.5 on return of average assets, and this only applies to financial companies, their last year in 2021 was 1.79 and the 5-year average was 1.3. those are phenomenal numbers. So do not discount that in terms of what they're doing. Our next slide, so let's go to slide
2
6.
minutes, Kevin.
Thank you. We have let's do our forecasting of sales. I don't have analyst consensus estimates to all help me out, so I just sort of have to read it. And I sort of said, 13%. It's a little bit below where the historic numbers are, but I think it's completely reasonable. So I went with 13. Let's go to the next slide, slide 63. The forecast earnings per share. Again, no analyst consensus estimates. And I sort of worked through and came up with trying the different scenarios that I got about a 14.4. And I'm doing it from the trend line because I just think it's a pretty consistent one, and it lets me take a look at things over the 5 full years because they just reported their fiscal year, whereas the other companies have not. Next slide, slide 64, we have our forecasted high price, and I sort of mark where I think the red line is a forecasted high price, where I'm sort of thinking I think it can bounce back up into those ranges in terms of where we are. I think I actually have that number. The forecasted should be down at 14. I put that number wrong. Excuse me for that. But because of it, I have a high price of 105.90. Let's go to our next slide, and we have our low price. And again, I'm sort of looking at this. I tried a couple different things, but the growth option seems to be pretty good for what they're doing. And as James was saying, with 80%, this time it's about 70. It's 72% of the current price of 54. I feel comfortable with that. Seems to be a pretty easy company to take a look at. Next slide, slide 66.
1 minute.
Thank you. I have it in the buy range, and you can be able to see where it fits in the zoning, and that's pretty straightforward. Next slide, the 5-year potential. I get it at 15.8 with about 20% of the payout ratio going out in the form of dividend, which is a yield of 1.4%, quite reasonable for a bank of this size. So final concluding slide, 68. Small, medium-sized growth company. It's well managed. It's on sale. And you'll see this a lot with banks where they don't always seem to be reflected with that. It's trading below its projected 5-year average PE. I think it's a buy up to 55.6. And it could be a candidate for purchase. So thank you very much. And let's go to our next presentation. And Brian, tell us all about CitiGroup.
Thank you, Kevin. Okay, next slide. Oh, you got it. Thanks. That's right. Good evening. I'm Brian Koenig, Maryland Chapter Director. Tonight I'll be discussing CitiGroup, which is a BI undervalued stock in the December 21 issue. The BI top 200 held stocks. The CitiGroup is number 122 on that list. Next slide. The goal for an undervalued company is 20% increase in investment value. That's market price plus appreciation plus dividends within 18 to 24 months. The advisory committee noted that the potential for Federal Reserve to raise interest rates if higher inflation levels continue, which I think we see they are, this would help the banking industry by raising the net interest income, which is a chief source of revenue. Next slide. CitiGroup traces its history to the first bank of the United States, founded in 1791. In 1812, just 2 days before the War of 1812, it was reorganized as City Bank of New York. And it had various name changes until following the 1998 merger with Travelers Group, it now became CitiGroup. Next slide. It's the third largest U.S. bank holding company. It operated under various names, Primerica Financial and some others. But its main competitors are Bank of America, JP Morgan Chase, and Wells Fargo. Next slide. CitiGroup financial structure has 2 segments. The larger is the institutional clients group with $44 billion in sales, serves corporate, institutional, and public sector clients and individuals of high net worth. I'm sure all of us BI members are in the high net worth part of that. Much of its revenue is generated from non-interest income. These include foreign exchange sales and trading in financial instruments. Next slide. Consumer banking. The global consumer banking is the second and the smaller of the 2 segments with 40% of the revenue. It's over 2,300 branches operated in 19 countries and jurisdictions. It provides commercial banking, mortgages, etc. CitiGroup also markets co-branded and private label credit cards. Next slide. In February of this year, Jane Fraser was named the CEO. She's been with the company since 2004 and oversaw all of Citigroup's consumer businesses. Since becoming CEO, she's focused on conducting strategic reviews of each unit, focused on cleaning up internal issues of regulatory concern and cleaning out weak assets. A special interest is reducing the long-term capital ratio from 11.9, which it is today, down to 11.5, which is a banking industry thing. Next slide. The current restructuring efforts are likely to continue into 2023, resulting in raised near-term costs. CitiGroup is exiting consumer banking in 13 emerging markets in Asia, but will continue institutional banking in these markets. Overseas, the CitiGroup will concentrate on wealth management and continue to conduct consumer banking in 4 places for sure: London, Singapore, Hong Kong, and United Arab Emirates. Next slide. Finally, CitiGroup is addressing problems with internal controls identified by federal regulators. Office of Comptroller of the Currency reported a $400 million fine. The Federal Reserve Board issued a related order. CitiGroup was given 120 days to prepare a written plan addressing the deficiencies, and the orders of the regulators effectively bar CitiGroup from making any sizable acquisitions for now. So I guess what it has is what it's going to keep. Next slide. An indication of stock is undervalued as the share price remained about 80% below tangible book value right now. Another indicator is that on June 2nd of this year, CitiGroup closed at a 52-week high of $80.29. Since then, it's slipped a bit. October 4th, they closed at 71.29, down 12%. When this was SSG was prepared on November 30th, it closed at 63.70, which is down 26% from the high. And today I looked when the Dow was up over 650, Corp was down 18 cents to $62.52. So I think it's sneaking down into the buy range. We'll see that in a little bit. Next slide. This slide is just to illustrate, Kevin kind of mentioned it a little bit, that SSG Plus has additional bank-specific data available. First to note is the sales are not from the making or selling of widgets, but it's from services rendered. Sales of a peer bank is usually listed as sales equals net interest income plus non-interest income. However, for CitiGroup, sales is just listed as net revenues in the value line report because it's large and does other things other than just pure banking. Also note in the legend over on the right-hand side, down on the bottom, you can select that and it will put a line on the graph for the total assets, and then down is at the fundamental company data, the bottom line is for the total assets. Next slide. And here we see the one specifically for CitiGroup. The historical sales along the bottom, and you see that the growth is about 1.3%. Kind of matches the sales. Next slide. Okay, CitiGroup represents the sales at net revenues, which was 74.3 billion for 2020. And for banks, the efficiency ratio is a percent of revenue represented by overhead expenses, and it tells how managers control their overhead or their back office expenses. CitiGroup's at 58% puts it in the best category, which is less than 60. Next slide. And it's okay. For bank stocks, the SSG Plus also displays an additional line in the evaluate management table down at the bottom called percent return on average assets. That quantifies management's ability to control expenses and maximize earnings. As a measure of the bank's profitability, good banks maintain an ROAA greater than 1.25%. Unfortunately, we note that CitiGroup hasn't had an ROAA above 1% in the past 10 years. Next slide, please. On this slide, I've displayed the sales and earnings per share detailed estimates from Value Line for the years 2022, 23, and 2025. However, if I used the quarterly projection, the sales projection aligned quite well with the Value Line data, as you can see. However, the earnings per share was way off because it went from the quarter way up above it. So what I did was I used a trend line for the projection for earnings per share, which you can see there tracks very nicely through the Value Line data. So what I'm showing you there is a combination of the two, the sales projection using the quarters for a sales forecast sales of 2% and a forecast earnings per share of 7%. Next slide. And here's a slide that just shows that. However, some of the data on the remaining slides are not accurate. Before I continue, let me explain how someone who has been teaching SSG preparation for over 10 years and completed hundreds of stock selection guides can allow an error to occur and not catch it. You remember that I just used the quarterly projection for sales, but used the trend line projection for earnings per share. At some point, when I relogged onto the online tools and opened the CitiGroup SSG, I didn't note that it was using my default projection selection of quarterly. This resulted in a 5-year earnings per share cost estimate of $14.98 from the quarter projection. And that is not the $9.59 intended, the trend projection. So I shall continue with the analysis using the correct $9.59 5-year estimate and pointing out the change values. Tonight, I will work with Kevin to ensure that if any of you desire a corrected copy, just send your request to my email address listed on slide 119. And while I'm on this, as Kevin said at the beginning, do your own SSGs and watch some of the data. Very embarrassed. In fact, if you saw me now, I'm probably redder than Rudolph's nose. But let's go to slide 86.
5 minutes left, Brian.
Okay. The two PEs were considered outliers on 2017. The negative earnings gave non-meaningful data. In 2020, the large decrease from the year prior from $8.04 to $4.73 made those considered outliers. So with those removed, the 5-year average PE ratio of 9.3 seemed reasonable. Next slide. Using the average high PE of 9.3 and the corrected estimated earnings per share of 9.59 gave a forecast high price of 89.20. I then selected for capital B, little b, the average low price of the last 5 years of $44.20 for the forecasted low price. Next slide. With the forecast high price of 89.20, the low price of 44.20, the buy zone is 44.20 to 55.40. The hold zone is 55.40 to 77.90. With the current price, when I did this, of 62.70 or 63.70, is in the hold zone, an upside downside ratio of 1.3 to 1, and a price appreciation from 63.70 to 89.20 would be a 40% price appreciation. Next slide. Again, using the corrected data, the compound annual return using the forecast average PE results in an annualized price appreciation of 4.0%, average dividend yield of 3.1%, for a total annualized rate of 7.1%. Next slide. So in conclusion, CitiGroup is a large size, slow growth company that is adjusting to upper management's restructuring changes. CitiGroup is currently, it trades at 65% below its 5-year average PE. It's on sale, but with regulatory hurdles that need to be addressed. As we mentioned, CitiGroup is in the hold zone at 63.70 for a 71% forecast compound return. It may be a candidate to accumulate shares via dollar cost averaging during the reorganizing period in anticipation of a successful restructuring. Thank you.
Thank you, Brian. And yeah, we've all done that same thing that you did, so don't worry about it. And again, we'll get any corrected stuff out to people. Jonathan, tell us all about Apple and the stock to study.
Okay, will do. Thanks, Kevin. I'm Jonathan Hunn with the Maryland Model Investment Club, and I'll be discussing Apple. Next slide. So Apple is quite ubiquitous amongst Better Investing. It's currently the stock to study in the December edition of the Better Investing magazine, but it's also found in the ticker heat map. There have been many first cut stock study reports, and you can also find it on the most active stock section in the magazine and also the website. Next slide. So Apple designs and offers a wide variety of consumer electronic devices and services. And I really want to focus primarily on their subscription services and some of their future technology in this presentation. Next slide. So the bulk of Apple's revenues, approximately 70%, come from the iPhone and services. Services represents about 22% of revenues, and Apple has been very aggressive in transforming itself to become the world leader provider of digital services. Next slide. Apple is also in a very unique situation with respect to its competitors. It has over 1 billion people currently using their iPhones and other products. So they have 1 billion people that they could sell things to. So even if a small percentage of their iPhone users subscribe to their services, they could continue to grow significantly. Next slide. Apple's services have continued to grow over the years, and analysts are anticipating services to top about $50 billion in profits within the next 4 to 5 years, probably or estimating to beat the iPhone in revenues. Next slide. There are 745 million paid subscribers. Apple's TV is expected to have 36 million paid subscribers within the next 4 to 5 years. Apple Music has over 70 million subscribers. And I also want to point out that Apple is not in any way trying to compete with Netflix, Disney, and Spotify, which have hundreds of millions of subscribers. They have a different goal, they have a different plan, and they're taking things slow and steady at the moment. Analysts are anticipating 11% compound annual growth in services over the next 5 years. Next slide. Augmented reality is going to transform how we work, learn, play, shop, and connect with the world. And Apple has the world's largest AR platform. Each of those images you see is actually video snippets, and you can see them on Apple's website. And these are actual apps. The gentleman in the wearing the glasses, this is actually an app from Warby Parker. So you can actually try on a pair of glasses virtually, and you can turn your head in different positions and actually see how they would look. So Apple is really betting on the future. They're laying a foundation. They're trying to build a base of software developers that want to create a large number of services and products for the largest number of users as possible. So if Apple decides to take augmented reality to the next level, they'll be in a much better position than their competitors. Next slide. Apple is aggressively working on healthcare. Tim Cook made this comment. I do think there will be a day when people looking back will say Apple's greatest contribution to the world was healthcare. They're aggressively developing healthcare products, one in particular, electronic medical records. They want individuals to be able to share their health data with their physicians and healthcare institutions. The health app actually has trend analysis, which can be used to monitor your wellness, including heart rate monitoring, fitness, and sleep patterns. There's also a feature within the health app that you can turn on called walking steadiness. There are millions of people that are at risk for falling. And when you turn this feature on, Apple, the iPhone, can actually monitor your walking and determine whether or not you're at risk of falling. Next slide. The Project Titan is Apple Car's project, and Tim Cook has made this comment. We're focusing on autonomous systems. It's a core technology that we view as very important. Next slide. 5G technology is going to transform our lives. And over the next 10 years, as they roll out 5G technology, there is going to be hundreds of millions, if not billions, of iPhones that are going to be replaced at that point. Apple also believes in order to make the best iPhone possible, it's going to need to design its own components. So it's developing and designing its own 5G modem that will be installed in their future products. Next slide. Morningstar states that there are plenty of opportunity for the iPhone business, particularly with emerging markets and repeat sales to current customers. They also state that Apple is still innovating, and this is very important to retain iPhone users. Unfortunately, Apple is behind in artificial intelligence when you compare them with Amazon, Alexa, and Google. Next slide. So Apple had a phenomenal year in 2015. You can see an increase in the sales and earnings at that time. That was one of their greatest years in history, but that has been changed since the pandemic. The pandemic has now they have record-breaking sales and earnings over the last year. The dotted green line represents my forecast sales growth of 5%, and that's spot on with the analyst's recommendation over the next 4 to 5 years. The dotted blue line represents my forecasted earnings growth rate, which is 7%, and it's consistent with what the analysts are also projecting. Next slide. The blue line is shares outstanding. Apple has a very robust share buyback program, and this is helping to grow earnings. The red line represents total debt, and that's flattening over the last few years. The purple line represents free cash flow. Apple has over $200 billion in cash, and this has been consistently growing over the years. The green line represents dividends, which have also been growing over the years. The company's financial strength and credit rating are also top quality. Next slide. Next slide. The quarterly growth trend graphs are showing sales, pre-tax profit, and earnings in a cyclical pattern. The last couple of years, they've been on an upward trend, and they probably have reached their peak. So these trends are probably going to eventually start to come down. Sales drives earnings, and earnings will drive the price. So more than likely, as earnings decreases, the price of the stock will eventually follow, and this might create a good entry point for purchasing Apple. Next slide.
5 minutes, Jonathan.
Okay, thank you. Sales growth and earnings growth trends year over year. Over the last 5 years, sales and earnings have been fantastic. For a large-sized company, we expect sales and earnings to grow between 5 and 7%, and earnings has just been phenomenal. Over the last 2 to 3 years, you can see there has been an uptick, and primarily this is due to the pandemic. But overall, the sales growth trends and the earnings growth trends have been fantastic. Next slide. I like to compare the target company with the peer group and the industry averages, and Apple has done either equivalent or better than the peer group and industry averages overall. So I don't really see any red flags when I'm comparing with the peers. There are direct competitors that I've put red stars, where those direct competitors have done better than Apple in certain growth metrics. But overall, management has been doing a fantastic job in steering this company in the right direction. Next slide. The recent quarterly figures have been great. With sales, again, these are record-breaking numbers. Sales about almost 30%, and earnings about 70%. I tabulated the analyst forecast for sales and earnings growth, and also the future high price. So I took the average sales of 6.74. I lowered this a little bit to 5%, and I normally would use as a guide 5% for my earnings, but I increase that a little bit because earnings has been consistently growing at a higher rate than sales. So I was okay in increasing my earnings forecast to 7%. So my 5-year estimate comes up to $7.87, which is pretty much consistent with Value Line's estimate earnings per share of $8 in the future. So I use that value to calculate my high price. Next slide. The current price earnings ratio is 28.8. It's higher than the average PE of 19.8. Apple is currently overvalued at this point, and you can also see that with the Value Line graph below. The green line represents the value line, and the red dot is the current price. And when that red dot is above the value line, the stock is considered overvalued. I used the high average PE of 25.4 to calculate my high price. And you can see that in the potential gain versus loss graph to the left, where my high price has been calculated at $199.90. And remember, that's pretty much consistent with what the analysts were anticipating in the future, roughly about $200 at that, that the analysts are projecting. And my upside downside ratio, 1.2 to 3. Next slide.
2 minutes, Jonathan.
So if we were to purchase Apple, thank you. If we were to purchase Apple at the closing price, this was of last Friday, $161.84, we would only be getting returns of about 5.2%. So if you added Apple to your portfolio, it may not add a lot of potential return to your portfolio. Remember, your portfolio ideally should be greater than 15% if you want to double your money in 5 years. So, but Apple, there's a lot of potential in Apple. Apple has a fantastic ecosystem. They have high customer retention rates and an expanding addressable market in services. With 5G expansion, there's going to be a lot of people replacing their iPhones over the next 10 years or more. And Apple's has been quite innovative and creative, and they have a great future pipeline that they're developing. Next slide. So Apple's a large size, moderate growth company. It's very well managed. Unfortunately, it's overpriced, but it's definitely a worthy candidate to add to the watch list. Thank you.
Thank you, Jonathan. Great job as always. All right, we've now loaded your brain up with stuff on all 4 stocks. It may be a little hard to take a look at it, but here's the review of them. And let's go to our next slide. And what we tend to do here is that this comes from a T. Rowe Price article that was originally written in Barron's in '39, where he talks about a company in a life cycle and where they have a growth of maturity and decadence. And this shows up in the BI handbook as well. Let's go to the next slide and we'll start talking about this. So we've sort of put things up here where they are. Brian, do you want to go first and tell us why you selected that location for CitiGroup, ticker symbol C?
Okay. As it started off, it's been around since before 1800, and it is probably, from age-wise, it's in the way past the stabilization. However, with the lady now in charge, and that they're going back and they're trying to redesign the company and make it probably with better growth. I think it's still in the mature growth area. It'll have to go a long ways to get anywhere down near the explosive growth line, but I couldn't see it in the decline or the stabilization because they're not just doing what they are, they're trying to do changes. So that's why I thought that'd be a good spot for it.
Okay, thank you. I'll go next, and I put Southern Missouri Bank Corporation not at the beginning of explosive growth like CitiGroup. It's actually been around a while, but it's significantly smaller than CitiGroup. But again, I remember as one of the bankers, one of the people who were a bank analyst who came to visit us, said that, you know, the nice thing about a company like Southern Missouri is that they know their clients. It's not like large companies where they tend to write, you can write off billions of dollars. But I think it just is a nice, good grower. I think there's still a lot of who would think that Southern Missouri would be a hotbed of growth in consumer spending or consumer loans, but they seem to be doing it, and they've consistently done that since they've been publicly traded 30 years ago. Jonathan, tell us about Apple.
Okay, Morningstar really summed everything up quite nicely. They talked about the opportunities for the iPhone. People had always talked about Apple just being an iPhone business, but their services has just been phenomenal, and that's going to continue to grow. It's definitely a mature company, but Apple is there's so much uncertainty with Apple because they don't really tell you a lot of what they're doing. For example, with the Apple Car, they've been talking about that Apple Car for quite a while, but if they ever produce an Apple Car, I can see Apple dropping into that explosive growth section very, very quickly. Morningstar also mentioned that they're still innovating and they're still creating fantastic products, and they have a very rich future growth pipeline too. So I wanted to put them sort of in the middle of that best investment opportunity because there's just so much growth potential with Apple.
Okay, thank you, Jonathan. And James, tell us, I did that based on what your presentation was. Hopefully I got that in the right spot, but tell us about sort of your thesis on Sam Adams.
So yeah, like I mentioned in the presentation, Sam Adams was founded in 1984. So even with their betting on the hard seltzer category and non-alcoholic beverages, their explosive growth days are behind them, but they have a lot to look forward to in the future with this different categories. So I think it's positioned correctly in the beginning of the mature growth stage, and looking forward to see how it performs in the next couple quarters and years.
Thank you very much. Let's go to our next slide. We're just about there. So if you like this stuff and you want to be able to make a difference in someone's life, reach out to Better Investing. There are materials we can share with you as chapter directors and be able to spread this news to people that aren't already in our community and tell them about this event too. Next slide. Let's hold off on the volunteering. I think it's probably time for us to probably have people vote. I always sort of forget to get to that voting part. So Cheryl will put up, you've listened to OSIAC, now it's time for you guys to vote on what you think is best. There it is. So none of the presenters get to vote, but everyone else does. Okay. We got just over 50% of you voting. Oh, this is a nail biter. We're up to 70%. It's really close. We're at 72, 74. Can we get up over 80? We're at 80. Can we get to 85? Maybe? It looks like we stopped. So why don't we go ahead and close the poll, Cheryl? And there is our results. So Apple and Southern Missouri Bank Corporation, dead heat. And the like. And Sam, you were in there, was in there for a while, and then they just sort of faded a little bit down the stretch. But that's what we'll do. And again, we like it as which is the one you'd like to do further research on, because as you can hear, some of them, it doesn't always look like it's ready to purchase it right away. All right, now let's go back to our telling about volunteers. We're just about in the home stretch, and we should be finished right when we say we will. And once we're done with this, we'll open up for questions and stuff like that. So if we can go back to the screen, Cheryl, or can I do it? Oh, there we go. Yeah, so we want to, if you want to volunteer, it's a great way to be able to be with other like-minded investors. It's a way to really hone your skills, and you get some discounts. Talk to any of us, and we'll be able to do that for you. And let's go to a couple more slides, and we'll tell you what's coming up, and then we'll open it up for questions.
Before we leave this slide, Kevin, let's share our newest news that the next national convention or conference, otherwise known as BINC, is going to be in Dallas in June of 2022. And you can go to the main page of events and get more information on that.
Thank you. Yeah, I think it's like late June, like June 20th to 23rd or something, like somewhere around there.
Yeah, I think it's 23rd, 25th.
There we go. And so again, we may have gone through this too fast for you. And if you go to this YouTube link, or you look under digging into BI in a search window for YouTube, you will be able to find this. Or give us, until tomorrow or whenever I can get Bhaskar to put it up. But there's, you can take a look at it and view it later. And you can share that with other folks. Next slide. And again, remember, we're saying that just like George Nicholson, sort of our intellectual founder, and Tom O'Hara, who ran things for many years, this is a learn by doing process. So these are our judgments. Please practice and do your own. We're here to help you and to be able to help you become a better investor. Next slide. If you need any follow-up, as Brian said, if you want corrected stuff for CitiGroup, there's his email address, as it is for all of us, or all the contacts for the 3 model clubs. Kent, Cheryl, and Marilee will be able to help you out with that. And I think we have one more slide, which will tell you what we're looking at for next month. We got McDonald's and Borg Warner, and then we got 2 more. So we'll find out something. And it's not going to be the first Monday because that's January 3rd and will be part of the New Year's Day weekend, but we push it back to the 10th. And with that, are there any questions or things that we can go over? You guys have all been listening patiently, so you can either raise your hand, or Kent, you can take us through any questions that you have there and divvy them out as you see fit.
Yeah, one question I have here from Barbara, which I'd open up her microphone. It says, is this present from Maryland chapter? And I guess I'm not really sure I understand the question. So Barbara, if you want to tell us a little bit more about that, that'd be great.
No, I just wanted to know what chapter presented this program.
Very good. So this is a joint presentation with the Maryland and DC chapters.
Thank you.
You're welcome. And then Richard is asking the difference between AI, VR, and AR. And so, Jonathan, I think that's a question for you.
So is the question in terms of the initials? AI is artificial intelligence versus virtual reality versus augmented reality.
Yeah, and Richard, do you want to add a little
I just wanted to, is there a difference between, well, you mentioned augmented reality. I have a device in the house, the Oculus, which is like a gaming platform, but it's also being viewed in the business world as doing things for the business world. It's virtual reality. And you also mentioned about artificial intelligence, which is something that you mentioned that Apple is behind the ball on. So I wanted to know what you felt was the difference among the AI, VR, and AR.
Well, all I can say, I will say that my understanding is augmented reality takes your environment and your actual environment and alters your actual environment. So you're taking a lamp from Amazon and you're putting that lamp on your desktop and you're visualizing what that lamp looks like on your desktop. That's my understanding of augmented reality. So it's changing your current environment. Virtual reality is creating it's taking your environment and changing it to make it look like something else other than the actual environment. And I think that's where the Oculus
Right.
works, because it's taking your environment and it's altering that environment some kind of way, and it's creating a virtual environment, so to speak. And
Right.
artificial
It's big in
intelligence,
gaming.
just another, right? And artificial intelligence is just a computer software application to make things smarter, so to speak. So I think that's AI is completely different from VR
Right.
and AR.
But, and
So that's my
nothing
understanding.
really, I had no other question, but I do want to add that Apple makes its own chipsets. And that's, I think, a big
Absolutely.
plus, that
Absolutely.
they don't have to buy, or they're in process of getting away from buying from NVIDIA or the Taiwan Semiconductor, and making their own, which I think is a big plus.
Absolutely. I made that comment about their 5G modem. They just bought Intel's 5G modem company. And so Apple is creating and developing and designing their own 5G modems that they're installing in their technology in the future too.
Any other questions, Kent, or hands raised?
Actually, we've got, let me check the hands raised. Oh, Alfred has a question. So Alfred, you've got your hand raised. So why don't you, let me just unmute you, and you can go ahead and unmute yourself and ask a question.
Thanks. It looks like you've answered it, but the main question was, if you don't have value line in Morningstar and you're trying to estimate sales growth and earnings growth, what's the method people are using? Are you just saying, well, it grew 5% last year, it'll grow another 5? Is there a specific method that people are using?
Kent, if you want to, I'll take that one, since my stock didn't have an analyst covering it and there was nothing from Value Line or Morningstar or CFRA. It is kind of difficult. You do have to sort of learn to read the trend lines. To do that, you can look at the quarterly trends. That's something that Jonathan showed up in his stuff on Apple. You can look at the quarterly trends in BI for that. The other thing is you just really have to read. And as you can see, most of us spend about half of our time just trying to figure out what the company does rather than just quickly running through the judgments on the SSG. It does take a little bit of guesstimate on there. I mean, as they say in the digital handbook, these are nothing more than a series of educated guesses. And, I think when you see straight lines like you do in Southern Missouri Bancorp, I can be able to generally use that as a good benchmark for where they are. And hopefully that answers your question. If not, follow up and someone else smarter than me will be able to take it over.
Thanks. No, that answers it. Thank you.
What else do we got, Kent?
Oh, wait, I got one here from Lawrence Wright. Let's see. Actually, Lawrence, why don't you ask that? Why don't you ask your question out loud so everybody can weigh in on it? Because I think all of us have different opinions about where we get our qualitative information. I know that some of us get it from CFRA and then Value Line as well as Morningstar, but go ahead and ask your question. I've unmuted you, so go for it.
Okay, thank you. I just had a quick question. So after going through the intro to the SSG classes, I'm feeling more comfortable. I'm getting the hang of doing the qualitative analysis for these stocks. But the part that I'm still trying to get a feel for is the qualitative part. So identifying, for instance, a company's sector, its industry, and then its kind of unique slice of life on sales, service, and product offerings as well. I was just wondering what resources that you guys are using to actually get that information to combine it with the quantitative analysis.
How about if we have Jonathan and Brian sort of answer that one?
I'm not really sure how to answer this. Quantitative meaning, can you repeat the question in terms of quantitative?
Yeah, so for instance, following the better investing method, quantitative analysis, we're going to look at earnings per share, we're going to look at sales. We know what we would expect for a company's size in terms of revenue and things like that, what some good figures are to assess whether it's in a healthy place. But identifying the qualitative aspects of it, such as the company's sector, its industry, competitors, and also getting an idea for its just catalog in terms of how it makes its money, I'm lacking in that area. So I was wondering what resources people are using to get that information.
I think that really is a lot of the background research. I think you just have to read a lot of different references in order to get the back qualitative story for the company. I think that's what it boils down to. So I generally will start with the research information in the SSG. A lot of the resources that are readily available on the online SSG. I tend to start there with Morningstar, Value Line, and then I'll start to Google information regarding Apple. You can check the news section, like Yahoo News on Apple. You go to the Apple section of Yahoo and then click on the news items and get some background information, qualitative information about specific companies. CFRA has a lot of additional information. So there's many different resources that you can use. But I try to stick with a few. Again, I try to stick with whatever's available on the SSG research tab. I start there. And we talked about analysis paralysis. You can keep reading and researching forever. It seems like, especially companies like Apple, there's just so much information out there. So, but you have to get to a point where you feel that you've got enough background story for the company, that qualitative information, where you can move on.
Brian, you want to add anything?
Anyway.
Yeah, well, let me try a couple things here. To get information on that, when you click on put your mouse over the company on the SSG on the online, it comes up with the industry, the sector, the company size, and then a description of what the company does. So that would be the one place where you can get an idea of that. If there's other companies, if you go to the compare peers, they'll have the ones that they think is appropriate. And if you then start to do an SSG on each one of those, when you select on them, they may have 3 different peers. And so you can find different peers just by going through the peer list. So that would might be a way of getting it. But Jonathan kind of alluded to it. In the SSG, up on the tabs on the upper right in the research, you can just go down through there and find a lot of information. The first one that I would, or one of them that I'd recommend, is go to the company website, to their investor relations, and look at their past or their annual report. And you can also do that on, let me see which one of it. Oh, under research, the filings and transcripts, go to SEC Edgar filings, and you can find the 10K, which is the annual report, 10Q, which is a quarterly report. And then there's other ones that Kim Butcher likes to go in to see when the management is buying and selling something. So you can look at those on the annual reports, look at management discussion and analysis. That's on any of the reports. That usually is about section 7. That's the company saying what they think is going to happen. So that gives a breakdown. That would be kind of where I look to a point. The only time that I think that I'd really get much more in detail than that is if you have two companies such as the Missouri Bank and maybe another bank somewhere else, and you just want to compare those two banks and you want to get a little further into to what they're doing. But generally, as a rule, my big portfolio says that I need something in the financial sector. I look for the financial sector, probably go to a financial ETF, a sector ETF, do an SSG on the top 10 companies in there that they're holding, and see out of those which 2 or 3 interest me, and then do more research on that, end up with a stock comparison guide, choose one, and go outside and rake some leaves.
I was going to say, and James, you've only been at this for a year and a half. You want to give any insight to someone who's just a little bit behind you on the learning curve?
I think Jonathan and Brian really pretty much covered it. You don't want to do too much analysis paralysis, but your friends are going to be your local library, so you can get access to some of these resources without paying a big dollar and get a nice return on investment. But just take advantage of resources like emailing the host of this webinar. Continue to go to Better Investing, reach out to them. I know I did a lot of that when I was just starting off about a year ago. And then there's a lot of just resources online, YouTube, and even on Better Investing website. They have like a learning center that kind of walks through different sections of the stock study. So I would do a variety of all those.
Okay, I think we've hit that one pretty hard. Anything else, Kent, or we're pretty much at the bewitching hour. Is there anything pressing that we haven't addressed?
I am not seeing anything at this point. No, I think we're good.
Okay. Well, thank you again for everyone showing up. This was a great night for us. And come back on January 10th. We'll look at McDonald's, and we'll look at Borg Warner and 2 others. So until then, you have our email addresses if you want to follow up with anyone here, and just to sort of follow up on what everyone else was saying. The only way you're going to get better at doing SSGs is by doing SSGs. So just do a whole bunch of them. You don't have to put any money on it, but just get in there and start pitching away. And with that, Cheryl, anything else we need to say other than good night, Irene?
I think you guys have pretty much covered it. The only thing I can add to the previous question is if you are studying a stock that does not have a lot of followers like yours didn't, that you can look at conference calls. I know when I was looking at Air Lease, when I was the stock follower for that, and they didn't have anything in our major categories, the conference calls were of great help, especially the questions that were at the end, tail end, asked by the analysts that were there at the conferences.
Okay, with that, I think it's time to shut things down. And again, thank you all for attending. Please download those handouts if you haven't done it. And please share the link for the webinar on YouTube. Take care. Good night, all.
Good night.
Good night.
Good night.
Good night.
Good night.